Hello, everybody. This is Alyssa Chiu. I am the founder and CEO of Anchor Taiwan, also the co-host and curator for the session today. Anchor Taiwan is a platform focusing on ecosystem building and venture capital for cross-border innovation. It is with tremendous pleasure and honor to gather so many of you from around the world to talk about whether the capital market is flat. For those of you who have read Thomas Friedman's book, The World is Flat, you can probably guess where I am coming from with today's curation. In 2005, Thomas analyzed globalization with his best-selling book. 17 years later, in 2021, are we seeing globalization in the capital markets as well? Well, in this year alone, I am seeing Taiwanese startup Appier getting listed in Tokyo, Just Kitchen getting listed in Canada, and now Gogoro going public through a SPAC in NASDAQ. Outside of Taiwan, I am seeing Grab considering a dual listing with a SPAC in the US, then a homecoming back in Singapore. In Vietnam, VinFast, the vehicle arm of Vietnam's biggest conglomerate, Vingroup, is also eyeing a US IPO. These are just some notable examples. I couldn't help but wonder, do capital market strategies transcend borders? It seems like entrepreneurs these days would go global for their exit strategies. How should investors and corporates react? Where are the hidden opportunities in this new era? Also, for some time already, I am seeing big asset managers and hedge fund managers now chasing private and early stage deals. Is the capital market getting flat, not just in terms of borders, but also stages? This is our 5th Asia Venturing session. Every month, we invite industry leaders from both East and West to share, inspire, and connect. Previously, we talked about the corporate venturing and CVC landscape in Asia, the future of mobility, how to innovate with traditional industries, and how global unicorns leverage Asia from zero to exit. You can find the recap and video replay throughout our social media channels and on YouTube. The Asia Venturing series would not have been possible without our co-host and important partner, DIGITIMES. Before we start, I would like to invite Eric Huang, Vice President at DIGITIMES, to share a few insights on today's topic. Eric, over to you.
Thank you, Alyssa. Greetings, everyone. Alyssa, Alex, Duncan, and Sonia. Glad to have all of you joining the panel. I'm Eric Huang, Vice President of DIGITIMES. I'm in charge of DIGITIMES Asia and our research team to provide tech supply chain insight with an angle from Asia. Before the panel discussion, I would like to share 2 interesting figures regarding to capital market and fundraising. During last month's Asia Venturing event, I mentioned that the numbers of unicorns keep growing in recent years. Compared to only 269 unicorns as of the end of 2017, the number had increased to over 860 last month. It's due to the soaring valuation triggered by the vigorous innovation ecosystem. Besides VCs and angels, corporate VCs, PE funds, mutual funds, family offices, and the public investors via SPAC that are joining the race to chase after promising investment targets. Let's take a look at the global IPO market, a bigger battleground for the capital. Based on the latest statistics compiled by Ernst & Young, the third quarter of 2021 was the most active third quarter by deal numbers and proceeds in 20 years. In Q3 2021 alone, there have been 547 IPOs raising $106 billion. For the first 3 quarters, there have been a total of 1,635 IPOs raising $331 billion, rising 87% and 99% YOY respectively. The prosperity of the IPO market has made some of the most prestigious VCs change their business model. Sequoia Capital last month created an evergreen fund, the Sequoia Fund, to hold public stocks. The lines between VC and PE are blurring. Asia maintains steady momentum in the fundraising market. Among the 860 unicorns, 30% are from Asia. Shanghai and Shenzhen are number 2 and number 3 of the top stock market exchanges in terms of numbers of IPO deals, just next to NASDAQ. Tokyo, Hong Kong, and India take number 7, number 9, and number 10 positions. The figures show the top market cap companies in each East Asia country. They reflect the industry's characteristics of each country. China and South Korea are the countries which embrace new economy and new technology most. China's Tencent and Alibaba are the global internet giants, and the CATL is the world's largest EV battery supplier. South Korea's Naver, Coupang, and Kakao are the domestic internet tycoons leveraging world's best internet infrastructure to provide innovative services. Japan also has emblematic enterprises such as Recruit and SoftBank. Taiwan's tech supply chain industry has its unique global competitive advantage. TSMC, MediaTek, and Hon Hai are the world leaders of the wafer foundry, fabless, and the tech EMS industries. While Taiwan doesn't have internet powerhouses like those in China, South Korea, and Japan, the development of a domestic innovation ecosystem has seen huge progress in recent years. Since the pandemic, Taiwan's transition from old economy to new economy is speeding up. With help from consulting firms like KPMG and investors like QIC, and the deeper linkage with the global capital market, we can expect more new economic rising stars taking off in the coming years. And the same trend will occur in other Asian countries. Now back to you, Alyssa.
Thanks, Eric. And remember, we always have a room of industry professionals in our session. Use the Q&A box in the bottom to really utilize your opportunity to engage with our speakers with the half-an-hour Q&A at the end. And remember to also feel free to interact with each other throughout the session in the chat. And now I would like to introduce the interviewer for the session today. Sonia Su is the senior counsel at KPMG. She is also a licensed attorney in New York who was VP at China Development Industrial Bank, CDIB, a well-known PE and VC firm. In addition to the capital markets, she started her career at Foxconn and has practiced law at some of the most well-known law firms in the world, such as Jones Day. Hey, good morning, Sonia. How are you this morning? And you are on mute, so let's hear your great voice.
Sorry.
You are up. Well, I hope you're as excited. Yeah, I can hear you perfectly now. So I'm going to let you introduce our awesome speakers.
Sure.
And the stage is yours. Have fun.
Okay. Thank you. Thank you, Alyssa, and thank you, Asia Venturing. Just before I introduce our wonderful panelists today, I just want to say a few words as the moderator for today's event. I think, Alyssa, the reason Alyssa found me, and because I'm the first time to appear on Asia Venture events, but I was very honored to be able to join this particular topic discussion because it's really relevant to me, not just to me, but also to my clients. As Alyssa introduced, when he gave my introductions, you will notice that my practice started from capital market lawyers or attorneys, and now for the past few years, it's been moving to advising startups, especially in their day-to-day operations and also their capital financing activities. So I'm also very excited to find out whether the world will be flat forever for my clients. So I was as excited as every one of you to be here and to hear what our panelists have to say, because they are all very heavyweights investors from two different spectrum of the investor sector. I think I will introduce first Duncan Davison, who's the founder of Bullpen Capital. And he is actually he has got very interesting background, and I will let him to do the introduction, but he used to be a lawyer, a technology lawyer. So he's just like me, I'm also a lawyer. So I'm very excited to hear what he has to say about how to do the early stage investments and how he has observing lately the trends that more and more capital market and the mature stage investors are getting more and more interested into the startup or early stage portfolios. And the other legendary panelist today that I'm going to introduce is Alex Lee, who is a very, very seasoned and reputable capital market bankers that when I was still a young lawyer, I don't want to call him senior, but he is always very reputable, and he's being involved in every major big M&A or capital market deals. So I've been admiring him for quite some time. So it's my honor to introduce him, Alex Lee, who's the founder and the CEO of QIC, a very, very famous local capital market advisors here. So gentlemen, let's start with Duncan. Can you just take a few moments to introduce yourself?
Oh, very good. Yes, I was a lawyer. I now go to the 12-step programs every month. I'm a lawyer, I admit it. It is possible to have a life after being in the law, which I think you're proving by being in the side you're now in, which is moderating this, being in KPMG, et cetera. My career has spanned several decades of venture capital. I was involved in the 80s and during the PC craze. I started 2 companies during the dot-com craze. Both went public. I thought it was easy for a while. And then I've been in 2 different venture funds recently. One was a very big mega fund that did a lot of clean tech. Tesla is probably their most well-known success.
Wow.
And more recently, Bullpen, which is exact opposite. It's a micro fund. It starts off at the other end of the whole spectrum. So having seen it as sort of a lawyer and then as a founder and then as a venture person, I've seen the full scope of this thing. I hope to share some of the information later with everybody.
That's very awesome. What about you, Alex?
Well, number one, I'm not a lawyer, even not by training.
It's very important to make that statement.
No, thank you. Thank you.
Lawyer is not welcome in Taiwan.
But I actually had this great event. Both me and Duncan represent different kind of an angle of a same capital market, even though the world is flat. Capital markets are even flatter, right? I've been working for like an investment banking mainly equity business in Asia, spent like almost 30 years in Taiwan. You can call me the advocate of the Taiwan's kind of a capital market globalization, right? Involving all different kind of stages of the deal. Before going into detail, I have to say, as a venture in this particular equity capital market business in Taiwan, as well as in Asia, there's a lot of changes. Regardless of all kind of a new creation in terms of a capital market tool and so on and so forth, it coming back and forth. I'm not particularly kind of surprised to see the SPAC or whatever kind of a new facilitation. But one thing here in Asia keep on changing is the dynamic of the industry and the economy itself, even for Taiwan. In the last 30 years, we start seeing the great industry and a company like a TSMC, Hon Hai being created with the help of a global capital market, right? And before like a COVID-19, all this company in Taiwan particularly become like a more value sort of equity by global investor, keep on generating cash flow and then paying kind of cash dividend. We almost forgot that Taiwan has another growth engine, which is sometimes like that we can talk about the new sort of growth engine, mainly in a new economy, software-based industry. I'm happy that before the COVID-19 and after COVID-19, I'd really love to share a lot of the new changing in that particular industry. Again, we can talk about a little bit later.
Great, thanks, Alex. So I think before we go into detail, I have some major questions surrounding the topic today for you two gentlemen. And because we have so much to cover, so I'm not going to do some paraphrasing from my side. So I'm just started to shoot out questions. And the first one is that, as Alyssa pointed out, and also as Eric pointed out in his statistics, lately, especially also from my personal practice experience, I'm starting to see financing coming from, for the startup companies coming from unorthodox investors, because normally the investors that would be interested in my clients, startup clients, are mostly like Duncan's VC funds or startup or angel firms. But lately, we're starting to get fundings. My clients, they are starting to get funding from later stage investors. And everyone, especially after the COVID-19, like Alex said, more and more interested is driven toward to the startup field. And also our Taiwan government is encouraging the financial sectors to do more study into the new sectors, which mostly crowded by the startups. So I'm just curious, because this is very exciting news for my clients, but I don't want it to be a fad. I hope it could be supported by some fundamental change to the industries. Just like Alex mentioned, that maybe take Taiwan, for example, our economy is at a juncture to do some transformation from the traditional industry, manufacturing, to software. And because we also have a lot of talents here in Taiwan who can also support that kind of innovation. So what's your view on this, the flat world is flat for startup companies? And what do you think? Is it a trend or is it bad? So let's start with Alex first, because I'm more interested, because I think Duncan might share some same view, but I think he would have some better ideas. But I just wanted to start with Alex.
Yeah, you could have to share some of my observation based on my almost 30 years career. Let's see, in the history, right? Taiwan newly sort of created industry when we sitting where we're from now. We're talking about like a TSMC semiconductor or EMS company like Hon Hai and many others, right? They sort of start growing up roughly about 30 years ago with initial capital, no matter from a government's kind of response fund or friends and family. When they grow even bigger, think about it, 30 years ago, Taiwan's capital market is not big enough. So inevitably, they need to win elsewhere. Say TSMC, UMC, those semiconductor company ever issued over $1 billion ADR listed in the US, right? To directly access the global capital market. I believe that Hon Hai also issued similar kind of fashion in the form of a convertible bond or ADR, GDR issue in the foreign market. That was the first stage of so-called the Taiwan capital market globalization, right? Again, I'm not surprised to hear what you just mentioned, that nowadays that or a sort of a startup company, I believe it's more like a later stage kind of a startup company or new company start embracing later stage of a capital, including the latest stage of VC, PE, all the way to the public equities. I have to say, this is driven by a couple of things. One thing is actually based on my observation in the last probably 15 years, the public equity guys, i.e. those mutual fund, pension fund, as well as hedge fund, right? They're under a lot of competition from like a quantitative or ETF, right? You see all of the number comparison and so on and so forth. That pressure just kind of become even severe. To really get out of this better return, right? Return is a main driving force. So all this active management fund, they need to look for some other alternative return. So pre-IPO or later stage kind of private equity become a source of return. Taiwan is not particularly like an exception. Look at what happened in China, right? Also global, no matter like the fund like a Tiger, like a traditional European value fund, Bildergiffer, they spend a lot of money in China. Taiwan just happened to be kind of a second or third sort of a market start emerging into that particular trend. I personally believe that kind of a fund, no matter from a return perspective, you'll keep on coming into Taiwan. and particularly from a demand perspective. Here in Taiwan, most of the startup company tend to be rather smaller, right? The valuation pretty much ranged from 100 million to 500 million US dollars before they went public, right? So normally this type of a size, I would say quite easily get ignored by the global late stage growth capital or fund manager. But there are some changes in the last 2 years. Through our sort of all kind of event, you're probably aware of that we've been hosting like the 10th kind of a Taiwan CEO week in a junction effort with the Taiwan Stock Exchange, right? We start seeing more and more late stage and the public equity money coming to Taiwan, even looking into this rather smaller kind of startup company, but I have to emphasize at a really later stage. The valuation ranging from 100 to 500 million US dollars. I guess based on my conversation with the various kind of investment and fund manager, they actually believe the growth, right? We may not have the unicorn right away, right? Here in the private equity stage, but so long those companies demonstrate got a potential growth, and that will attract a lot of like a late stage and the public equity money here. At least I believe this is at the beginning of this type of investment trend. This is not particularly kind of uncommon in Asia, just coming to Taiwan right now. I believe they're going to continue for at least a couple more years. That's my observation.
Oh, that's very exciting to say, to hear that. And Duncan, before I'd like to hear what your thoughts on the same questions. I also wanted to mention that because having advised my clients for the past 2 or 3 years, mostly they are contacted by venture capital or early stage VC firms or CVCs. But for instance, one of my the clients who's specializing in VR and the metaverse kind of sector, they've been contacted by venture capital team from KKR, which is a PE firm that we all know that they mostly specialize in later or public deals. So I'm just curious. I can't help to wonder why the PE firms would be so interested in clients of mine who are maybe in their Series B stages. Normally, the portfolios that your firm would normally invest in, but now they are also chased by later stage, and maybe sometimes they are chased by SPAC sponsors. So what's your view on this trend? Is it a bad or a trend?
Well, it's a very good question. And I'm going to give you a mixed answer. I know you want to hear trend, but it's not trend. Venture capital is cyclical. This is the most important thing to understand. If you go back in history, even before venture capital, all great technologies came in on a boom and bust cycle. Railroads, cars, the jet age. There was a boom period. It's followed by a consolidation period. Example, from 76 to 83, we had a boom period in PCs and semiconductors in the US, created Silicon Valley. From 83 to 94, it was a consolidation phase. People in Silicon Valley thought it was over. We actually created a whole initiative called Joint Venture Silicon Valley to try to figure out what to do about it. But if you're a smart investor and you move to the consolidation phase, not the boom stage, you can make much more money during that period. So it's basically, there's a phase of getting a new technology introduced at scale. And then there's a phase where the winners emerge, and that's where all the money's made. So right now, we're coming through a period where we've had a really good boom, and it's not over yet. And usually late in a cycle, PE firms, KKR, and people start coming down. KKR invested in 2 of my companies. I must confess, they screwed them both up royally, but they did come down and give money. The reason I say that is their instincts and their attitude for how to do capital investments and treat startups was actually self-defeating to the startups. They came down with knowledge from a different scale of company and tried to apply it to an earlier company and kind of broke them. So be very careful about this.
Yeah, I totally understand what you're talking about, because I've become very best friends to a lot of the founders of my clients. They don't really like know someone who doesn't know their sector come in and tell them how to do that to improve their financials.
So we have a mixed feeling about this, but we try to leverage it properly.
Yeah.
What's going on in the US is what I call the Great Bifurcation. Certain companies get to a certain scale and then pounce. These big PE firms or public market firms will come in and pounce on them early. Now, if I can pull back, and Alex knows this, traditionally, when you do an IPO, there's a bunch of the mutual funds try to invest before the IPO. They want to be in the last round to get in a little cheaper. Back in the day when I started a couple of companies in the 90s, I literally started a company in October 96. It was public in October 98. And it was worth $9 billion in February 2000. Think of the speed of that. But that was actually more typical. Usually you try to go public 5 or 6 years after starting a company. You'd be a much smaller company at the time, and the Fidelity mutual funds would come in and invest at what now would look like a C round. So when the US changed the policy for IPOs and made it a lot harder to go public, which they did after 2000, IPOs became as rare as unicorns used to be. But as we get more and more IPOs, the same investors are coming in earlier. But if you go back in history, they're not really that much earlier than they used to come in. It just feels that way because the IPOs are delayed. So what we do, when we have a company that got some very good investors coming in, we actually are glad some of them came in. There's a certain level of how to scale a company, how to handle big money. For example, the company I started went public in 2 years. The PE firm that came in helped it raise $2 billion in junk bonds at a time when I didn't know how to do that. That skill was incredibly useful. We have another company now where a public investor has come in and they are experts at scaling a company. They know what the public markets want to see. So we welcome them. I've met with them. I'm happy they're in it. So in many cases, these later stage investors coming in is a blessing, not a curse. If they come in too early, it can become a curse. But when they come into the level they're really good at, which I would say in the US is unicorn valuation, $500 million to $1 billion valuation are usually where they would have come in 25 years ago in an IPO anyway. I'll remind you, Amazon went public at a $400 million market value. If you had been lucky enough to put $10,000 in it, you're probably worth, I don't know, $10 million today.
Yeah.
That's pretty cool.
Yes.
Duncan, if I can anchor that, and let's not forget there's another trend, which is a VC PE fund, like a Sequoia that Eric just mentioned early on. They actually kind of further investing after the IPO, right? So this is like a hybrid, right? Not just a public equity fund moving into the early stage, but also including VC. Particularly nowadays, kind of VC become like a giant, right? I bet that maybe it's because for the sake of return, maybe it's also because try to extend the life, or maybe it's because nowadays kind of the capital market probably can provide more like an opportunity to create the valuation after the IPO, right? So I think this is like a merging from a both sides. Either way, I would say there's a great opportunity for smart funder and a great sort of a kind of startup company.
Yeah, look, Sequoia may be a unique case. They are the premier venture fund and they can do what they did. But to some extent, if you have the capability of doing what Sequoia does, when the market goes from the boom to the consolidation, you can quietly shift your focus and then shift back in the next boom. And so that isn't a bad model if you have the skills at both ends. But Sequoia may be pretty well unique at that. Maybe some others will emerge. Most venture funds in the US are no good with the scaling and public side of a company. They have no experience there. They're very, very good at the early stages. And so for them to try to pretend to be Sequoia would be a mistake.
Okay.
Look, I think for the thing to get out of this is I've watched this in the PC boom and the dot-com boom. Late in the cycle, people like KKR would come in, and then when the cycle ends, they would go back out again. And I think we'll see the same thing occurring here. But going back out again means you focus on the consolidation phase and help the winners win more versus just go away. It's just a shift in your focus.
Great.
Sonia dropped, I saw that. You know, I don't mean to play her role, but she had a second question on her list. And maybe this is really for you, Alex. It says, how can Taiwan's supply chain sector play a role with startups to try to enhance it?
That's been the question being asked, like among all of the those traditional EMS or semiconductor company. I had a very different kind of a view because a lot of a company, think about a TSMC like and a Hon Hai and so on and so forth. They are possibly the biggest beneficiary of COVID-19 because disruption of this supply chain, right? So a lot of this type of company, particularly public company here in Taiwan, they probably enjoy the highest kind of a net income, the highest kind of a cash flow kind of piling up. But at the same time, before COVID-19, bear in mind, Taiwan being well known as a value kind of investment paradise for a lot of emerging market investors, because in the last like 15 years before the COVID-19, the market generating at an average like a 4% cash yield, right? The free point of the cash yield is that there's a no growth, right? And all of a sudden that COVID actually helped the company sort of shift the gear to growth, right? But at the same time, with a part of the cash, that also given a lot of a great sort of pulse to think about what is the next. Should we go back to the next like 15 years, keep on kind of piling the cash, paying the cash dividend as a cash kind of a generating machine, or something else? This is a perfect timing for all this like EMS, whatever the well-established company in the supply chain. Think about the future. That's how all of this new sort type of investment or so-called from a CVC is coming up, right? But I believe that Eric will just show some kind of valuation table, right? Most of this so-called hardware company, they're probably trading around like 10 to 15 times of earning at the best, or at 1 times price sales at the best. For this type of a kind of a sort of corporate operator and the VC, they will have some difficulty to think about to invest in the number one, the company got a pre-earning, no cash flow, right? Possibly only grows in terms of like a revenue. They're trading roughly around like a 10, 15 times price to sell and a no earning. When they have the earning, they're probably trading around like over 100 times of earning. It happened all the time, right? Of course that those CVC or corporate themselves can invest themselves, put the money to work. They're never short of a cash. But I also suggest that this is a perfect timing for the guy like you, Duncan, and many other like a PE fund, VC fund, to connect to those corporate, right? To offer different kind of perspective. And considering that not just mindset, but also the great sort of corporate governance, a lot of a kind of a money investment disposal, they need to meet certain criteria, subject to approval of the board. Literally in Taiwan, if any, no matter large or small company, if they want to invest them by themselves over say $10 million US, they need to go through all kind of a committee and an approval that will give the manager making that kind of a decision under sort of scrutiny or kind of like a corporate stress, right? Do they need to carry that kind of stress? Sometimes yes, if they consider as a great company, also carry a lot of strategy sense. But in most of the sense, I would say more than 50% of opportunity, they should leave that money to professional manager like bullpen and some other like a VC and a PE fund, investing and exploring the new opportunity, not just in Taiwan, but also outside of Taiwan. I think that's a great trend to take advantage. I may not be 100% familiar with that particular industry, but I would say, and based on my understanding, there's a lot of room for the foreign PE fund VC, particularly for you guys, like a bullpen, to build up like a direct contact with those well-established technology company here in Taiwan.
Yes, sir.
Thanks, Alex. Yeah, Duncan, also curious about your view in terms of what you're seeing from where you're sitting in terms of, especially since COVID, are you seeing more interest, less interest? What's your view as a US-based investor when it comes to opportunities in Asia?
Well, first of all, I saw Sonia was trying to get on. She was having connectivity problems. So thanks for jumping in, Elisa. I want to respond a little bit to Alex. You look at Rivian just goes public. Everybody probably saw it. I was on CNBC talking about it. So it's become near and dear to my heart. You look at these companies that are doing EVs, they are selling at 10 to 20 times future revenue. They're not selling at 10 to 15 times earnings. It's just, it won't last, but it's a whole different scale of valuation and return. And so one thing I would just say back to the supply chain industry, you provide a very, very valuable service to the world, but your return expectations and all that are so different than venture capital. And I think you're right. It'd be a mistake to try to play in that type of business in the venture world because it'd be so dissonant in how you'd think about an investment. Now, Lisa, what I think about, first of all, with Taiwan, I have a company that was manufacturing in China. They're going to move it to Taiwan, mostly to get around the tariff charge. But more fundamentally, people over here think hardware's hard, software is easy. So they view hardware deals as we'll do the software and we'll fly to Shenzhen and get somebody to do the hardware and it'll be cheap and easy. And they sort of outsource, in that sense, that part of the building of it. Certainly, Taiwan could be in the center of that. I think I mentioned to you, you go to a place in Shenzhen, there is a tower, and that's where you go to get all the gadgets to pull them together. You need a tower like that in Taipei. More generally, here's what we think. I've seen a decrease in interest in investing in Asia, not an increase recently, partly through COVID and partly because of China. But it's very much a China-US dilemma. I've been to South Korea, I've been to China, I've been to Japan, I've been to Singapore, down to Australia, trying to figure out the startup communities. The way Japan does it does not lend itself to be a robust startup community. So certainly Taiwan could figure out how to do it better. Korea is doing a much better job. We've invested in a Korean deal. Singapore, of course, is Singapore. It's a small place, but a lot of people go there. Australia has this interesting phenomenon. They put together a venture community in 1999, 2000. It was doing okay. When the bubble burst in the US, the Australian attitude was, see, we were stupid to do it. Let's go back to the old ways. The wrong attitude, right? This time around, they began building it about 10 years ago with some more modern thinking. And now it's a terrifically robust sector. And it's got some unicorns. It's got all the right attributes of venture doing it right. And they bring companies across the pond to the US for further funding. So I would suggest another idea is you guys look down there as a model. I know it's not quite the same thing as East Asia, but it's in your part of the world. Go down and watch and see what they've done. And maybe you can duplicate some of that in Taipei. We're open to investing overseas. We're beginning to extend out of a little cloister in the US. The issue with startups is that venture people learned over the years, startups are local. You want to be 20, 30 kilometers away from the companies. You can go check in on them all the time. What's fascinating is Zoom. Zoom has begun to change that. We're doing deals on Zoom and we don't care where they are. So because of this ability to do Zoom deals and manage through Zoom, it now opens up the US investor looking more favorably overseas. I don't think it's changed much, but there's a possibility it will change.
That's fantastic. Yeah, and I guess I'm seeing two forces from what you're saying, Duncan. One is maybe because of this bigger macro US-China tension. So there is a little bit of decrease in terms of interest when it comes to deals and investments related to Asia. But at the same time, because of COVID, because of Zoom, I guess, that border has been kind of like extended when it comes to, this 2 hours radius rule, looking for deals, having to ensure that you can fly over for your board meetings. And back to Alex a little bit in terms of what Duncan's mentioned, because I think one thing very fascinating, at least for myself, is that for the capital markets in Taiwan and perhaps some of the other Asian markets, it seems like for maybe investors like Duncan, it seems like it's somehow close As in, like, you need to really get to know the right people, really understand the industry. While in reality, while a lot of Taiwanese listed companies, their operations might be very local, but it seems like their investor base is actually already very, very international. Well, a lot of people might not be very aware of that. Can you share a little bit just in terms of the capital market structure that you're seeing, and, you know, like maybe educate our audience a little bit in terms of the capital market structure? You know, like, how come some of the investors that are already investing in Foxconn and TSMC and so on and so forth for years, why this is really a pivotal point? And from your personal interactions with these people, when they look at, you know, like Taiwan or Asian deals, what do they care about? What kind of questions do they ask? We'd love to actually hear from your firsthand experience.
Sure. I have to confess, I'm a little bit surprised to hear the comment from Duncan, right, about the interest level decrease in Asia, right? Of course, I bet this is more from a VC kind of perspective, right? At the later stage, in a public equity perspective, I see the slight kind of different view. As a whole, yes, like Taiwan, South Korea, Japan, if not mistaken, there are the net kind of outflow market in the last 18 months, right? With a lot of reason, like a tension between China, US, and MSCI inclusion of China, make an emerging market kind of make a quite significant changes because of the capital kind of allocation differences, right? But outside that, I see more, I would say, the foreign capital and the foreign investment at a public equity market, and also called like a late stage kind of interest start increasing in Taiwan, new economy companies, right? Let me just give you a couple examples, right? In Taiwan, we have roughly about 57 so-called software new economy company listing. But I classify it as a more like an old stage, old-fashioned kind of a software gaming company, right? Which most of them trading below like a $500 million US, a typical kind of small cap. Starting from early this year, we have the birth of a unicorn out from Taiwan. Say, for example, the MarTech company appeared trading at a Japan like a motherboard at a if not mistaken, 1.5 billion US dollar market cap, right, from nowhere. Now still trading about like 8 months away, still trading around like $1 billion. In Taiwan, we got our homegrown like software companies. This is the first ever SaaS company listed in Taiwan, 91 apps. This is more like a Shopify kind of a company here in Taiwan, trading around like 27 times the PS ratio, which is for 2021, roughly about $1.2 billion now, right? All I want to say, all of the investor and the buyer are a bunch of the global investor. The same group of investors, they invest in TSMC. They also invest in Tencent, Ali. They also come into Taiwan, investing no matter the company in the 91 apps, trading in Taiwan, or Appier listing in Tokyo. And more, based on the data point I collected from my latest kind of event, Taiwan CEO Week. In this particular event, we finished sometime like mid-October. We invited roughly about 54 company CEO and a founder, and 13 out of them are software-based company. Of course, we designed it for the sake of a reason, because in the last 2-3 years, we start find a quite subtle shifting the interest from TSMC, MediaTek, Honghai to software company. So that's why we invite a lot of them. Plus, we also additionally invite like a private company, focus on nothing but new economy, software, e-commerce. All of them attract more than 30 to 40 investors individually. We totally set up roughly about 1,600 kind of a meeting among all of them. The meeting lasts roughly about 2.5 weeks. Again, based on all this number and the feedback, we reconfirm again the interest. Again, I have to emphasize that is a different from a VC, right? They are focused on like a late stage. Maybe you can say that's part of the cycle because of so much kind of liquidity. But again, the interest is not only on semiconductor, not so much on the hardware. Again, this is great, this is fantastic, this is the foundation and the cornerstone for Taiwan economy. But more and more money actually moving into the new economy. That's why I feel so exciting. Again, look at me, I'm not like a new economy kind of guy, right? But I've been driven by all the data and feedback. So there's a many chance and a great opportunity to see Taiwan try to play the catch up to like a Korea, right? Korea actually is a great model for Taiwan. Whether China or US a great kind of role model for Taiwan startup company, I have my question mark, right? But for what happened in Korea, Taiwan got a half population of South Korea has, right? And the largest kind of a new economy in terms of market cap, I will call Momo, which is a TV shopping and an e-commerce company, now only trading roughly around like a 14 billion in terms of market cap, not even the half of a Kakao and the Never, right? So it's got a just great potential. So that's why I start like a flagging and writing a lot of a kind of a email to remind investor, most of them like a global kind of equity kind of a guy, watch out Taiwan, watch out new economy, right? They are coming and more to come because you look at like all the new company in the pipeline, you got 100-something kind of company trading, moving into the late stage. They are ready to go public, no matter in Taiwan or somewhere else. I think this is a deep area that a lot of global investors paid attention to.
Fantastic. And I think just really reading from the numbers, right? Not just because, like we love Taiwan, judging from the GDP, if we were to look at comparables, I guess, across Asia, I can see where Alex is coming from when it comes to the GDP comparison in terms of, and versus market cap. Like really there's huge opportunity coming from this part of the world. And I guess for Duncan's, I'm curious in terms of from where you are sitting. Obviously, you focus on post-seed. First of all, before we go into maybe your view when it comes to the prediction with the capital markets in the next, I would say, maybe 2 to 5 years, what have you been seeing in the last decades when it comes to post-seed investments? Like obviously the size has changed, but just in general, when it comes to maybe the type of founders, verticals, just in general for your day-to-day, what you're seeing. And with that, how do you form your capital market prediction for the next 2 to 5 years? And I'll get back to you, Alex, when it comes to your view as well around capital market predictions too.
I just want to add something to Alex's commentary. Korea recently set up government-sponsored venture funds that are matching, and they're now getting a bunch of venture funds started. For a US investor doing an early stage deal in Korea or in Taiwan, it'd be very helpful to have a local lead, somebody local we know and trust who knows how to deal with the early stages. So that's something Taiwan may be able to, copy Korea on to a great effect. So post-seed, let me go back a little bit. And this goes back to one of Sonia's questions of what's a trend and what's a fad. About 15 years ago, it suddenly became a lot less capital intensive to start a company. You could use open source software, you could use Amazon Web Services, and suddenly instead of taking $5 million to get a company started, it was $500,000. And this led to a great explosion of deals and seed funds designed to put in the $500,000 check. Now that trend, I think, will continue for as long as it's inexpensive to start a company. And it could continue for a long time. Certainly software companies, and software is still a major factor, don't take a lot of money. We started our fund around 2010, having seen this phenomenon. At the time, there were 20 seed funds in the US that had been formed between 2005 and 2009. And we said, oh my God, if this continues, there might be 100. Now there's over 1,000. It's been a total explosion of seed funds. We decided to do post-seed, which is kind of late seed. Let them all fight for the early stuff. And when the winners begin to emerge, that's when we invest and try to set them up to get to the big A round. What we have seen, since we're a stage focused, not a vertical focused company, we've seen almost everything coming through. Maybe not synthetic bio and med tech, but things in the digital realm, we have seen it all. And what I find interesting is this, and it gets to a question we're going to talk about: when will the party end? It's one of the questions I see on the Q&A. When is it going to end? And the answer, I think, is when we run out of new ideas. The reason I say that, in the 80s with the PC craze, there were about 40 businesses one could create: disk drive, floppy disk, memory chip, etc. And we got to around 40, and then they'd all been done 50 times over and over. It was over. In the dot-com craze, there might have been 200 types of businesses that we could invest in, and they all got, how many pets.com do you really need? They all got filled up. Today, though, we are constantly surprised by new ideas. A lot of it is SaaS. It looks like corporate SaaS has a ways to go. Maybe only 40% of the things that could be turned into SaaS have been done. We have ways to go. New stuff comes in all the time. There's a lot of creativity. There's things nobody thought would happen that are happening out there as apps. So as long as we continue to be surprised, this could continue going. That's my hope.
So awesome, definitely. And I think, first of all, Taiwan does also have government supported and sponsored funds. So hopefully we will see more activities around that. And for investors like you who are interested in our parts of the world, perhaps, like them or some other local funds can be your local partners to really enable more cross-border investments and deal flow. And corporate SaaS, I think that's one of the relative strong suite for Taiwanese founders. So hopefully we can also see some interesting companies and deals from that as well. And I'll come back to you when it comes to, I guess, like the prediction for the capital markets. And for Alex, I'm kind of curious. So basically, with where you are sitting, what are you seeing in the next 3 to 5 years when it comes to the capital market trends? We are seeing this shift. The big guys, they are coming earlier and earlier. Are we going to see everybody becoming a venture capitalist? Everybody investing in startups? How is the world going to look like, especially when it comes to this cross-border flow?
Well, in that particular regard, I have to say I agree with what Duncan just said, right? VC is a cyclical industry. Again, property equity also is a very cyclical industry, right? Think about the background here. The background here is that we got too much liquidity because QE, because whatever happened, right? Which all of a sudden make all kind of investors become so brilliant in terms of like, I'm a VC, I can invest both early and the late stage, right? But I guess this is once of a lifetime kind of a cycle here in Taiwan. It's not so much about the liquidity, right? What I'm trying to say is, if I can just make it even clear, again, I don't want to say I'm the expert for some other country. If I can use Taiwan as an example, in the last 15 years before COVID, right? A lot of the investors, even me included, we feel a little bit hopeless about Taiwan because no new idea, no growth. Company keep on piling the cash flow, paying the cash dividend, right? Maybe that was the stage that Duncan referring to consolidation, right? But there's a good reason for consolidation. The stronger companies stay stronger because they keep on accumulating the cash. The weaker stay away from the market. So whatever still stay in the industry, they become a stronger one, right? Now the COVID thing's coming, which is not just, again, I shouldn't say that, it become a blessing to Taiwan overall, right? They have not just give it a pulse, but it's also give a new direction that have a Taiwan to think about what is next, right? Again, if Taiwan can take advantage of the market cyclicality up and down, I'm just reading some of the question from the audience about the valuation. Of course, I'm not saying that the valuation going to sustain. I don't have a crystal ball. Even I have, tell the truth, most of the time I was wrong, right? How can I predict that the valuation, the PE, like 3 years from now? But one thing I would love to try to predict is, based on what I just described, the structure changes. Taiwan new economy stay for better chance than in the last 30 years. Where the old economy, the well-established company, kind of continue growing. I think the answer is yes, but rather weaker yes. Because how much can benefit because of COVID, right? or whether all this company will become a totally kind of transparent and naked to show who they really are. I think give us like another 18 months. We'll see who's a real winner, who's gonna be like embracing the changes. I can also make another prediction about a well-established company. If they are not start changing themselves, you will end up even worse before the COVID-19, right? But again, my hope is not bet on whether there's an old economy, the well-established will become like a better, stronger company. They're already in the history book, is in the chapter. My hope is more about all of this, the background structure changes all of a sudden create a great opportunity for a new economy in Taiwan, like SARS. And also that some of the audience also challenging the question. One of the, again, is I think is a good challenging, right? Taiwan is a small market, right? How a SaaS-based company, software-based company can really propel themselves like a bigger economy, like a Korea, right? I think that's exactly the beauty of a software, right? They can build up their own business model from like a local VC, friends and family, government sponsored fund, right? Build up their kind of sort of first leg of success here in Taiwan and tap into the capital market. The market giving them like a abundant kind of valuation. This is where the big difference between the old software company and the new software company. Old software companies say, that's great. I'm the winner already. I hit $1 billion and I got a lot of cash. I will stop growing. I will stop paying kind of cash dividend. I'm begging a lot of the founder in a new software company. You need to keep on investing because you got a great opportunity. The market gives you so much kind of valuation. Keep on, I'm not saying you have to raise money or what, just keep on raising, investing. If you happen to ask for money, yeah, go ask for it. Instead of like, I'm ready to pay in the cash dividend like my dad, like TSMC or Hong Hai, don't do it. Or otherwise you will just end up with the last generation kind of a software company, right? So what I'm saying is, yes, Taiwan is a smaller market, but Taiwan is good enough to grow a bunch of like a really strong, solid software company with a one country kind of foundation. Then after like a support from the capital market, go other vertical or go other market. The usual kind of market, first one could be Japan, right? Maybe some of the like ASEAN countries. Again, when all of the global investor, public equity investor, the first question to ask is also, okay, do you only have a product or market in Taiwan, right? That's always the number one question. If your answer, any founder's answer, yeah, you know what, I only want to do Taiwan, they will never enjoy any kind of a higher valuation. Everybody got a plan. So the plan is never only on Taiwan. It always go elsewhere as the second sort of leg or growth driver for the next stage.
Yeah, so go beyond border as well and don't stop taking risks. That's the main message that I'm getting. And I see Sonia, finally, welcome back.
Hi, sorry,
yeah, I'll let you,
sorry.
no worries. I'll let you take over with the last question and
moving
into Q&A. And a quick reminder, I'm seeing some really great questions popping in the Q&A session already. Remember, try to also let us know whether your question is for a specific speaker or for both of them so that Sonia can help navigate all of the questions during the Q&A session. Over to you, Sonia.
Okay, just one last question. The last question is for Duncan. I'm very glad to hear Alex said about Taiwan's new growth engine, which is the software market. But also lately, we've been heard a lot about the phenomenon, which what we call SPAC. And I've seen the interview featuring Duncan in a Yahoo Finance press interview. And Duncan, you obviously has some very interesting points and reminders on this specific subject matter. Can you shed some light on our audience as well?
Sure. SPACs have been around really for about 20 years in the US, and they were considered fringe. And I actually met somebody who at one point had invested in over 25% of all SPACs ever. So we knew a lot about them. What changed things was a SPAC took a company called DraftKings public. Now, we at Bullpen know DraftKings really well because we invested in FanDuel, the company that originated fantasy sports on a mobile phone. And DraftKings came along to chase it. And so it was like a love-hate relationship. When DraftKings went public in the SPAC, it went up in the stock market quite a bit. That rang a bell. Suddenly, SPACs could be used for certain types of companies to take them public. What I've been watching in the SPAC world is that SPACs are really good for a faster IPO than the normal IPO. So it's more like the IPOs I remember back in the 90s or in the 80s, where you could get out in 2 or 3 years. And they seem to be best tuned for aspirational companies. There's a lot of words for these companies. The Robinhood investor loves to invest in stonks, if you've heard that word. You've heard of meme stocks, and Tesla is the meme of meme stocks.
Yeah.
This doesn't mean they're sophisticated investors of the sort that Alex would appreciate. This means they're chasing rabbits. And so suddenly company X is hot, let's put all our money into it. So it turns out, though, that SPACs have to go through a discipline before they really work, which is the private investor has to come in before you go to the public. And this private investor is the same one we've talked about, like Fidelity, a mutual fund. That's a very experienced public investor. You get them to come in, and then you can go out in the public market with the SPAC stock. If you pick certain companies, electric vehicles are a good example. Lucid, which went out in a SPAC, is like the number 3 EV after Tesla and Rivian in the US. Mm-hmm. Sports gambling is a very good area, it appears. There are other good areas like that. FinTech, where you use consumer, technology to overcome banks. You never go to a bank. The banks are old-fashioned. That's another, I call that aspirational area. These are areas of extremely high potential growth. They're buying future growth and therefore future revenue. And those seem to be perfect for SPACs. SPACs don't do as well with corporate SaaS products. Why? They don't have the growth potential. And why not go out in a normal IPO? Because the bankers are very good at SaaS IPOs. So I like SPACs. I think what I said in that particular interview is I'm not sure if SPACs will blow up before they get fully institutionalized. Mm-hmm. It's a race between one hand and the other. Because whatever bankers do, they always take whatever the trend is to an excess until something blows up.
Yeah.
So we'll see which wins. But I'm betting that SPACs will become an institutional alternative to the normal IPO for a long time.
Right. I like the conclusion that you just made about the institutionalized, which is always the norm in capital market. No, because if you want this vehicle to become sustainable, you have to have some rules. It's not like a fad that you can just have too much of it and then you blow it up. So now let's move to the Q&A from the audience. Like Alyssa said, I saw some very interesting questions. And the first one is for Duncan from Rex. He's asking any specific markets, technologies that you see in Taiwan, which could play an important role in the R&D development for other Silicon Valley venture-backed companies. For instance, in your portfolios, what are the sectors in Taiwan that you think can team up with your portfolios back in Silicon Valley? And maybe they have can have some true sparks and chemistry in the future.
So I love Rex's question, also the question before it from Will Hay, because they're related. Because Taiwan itself is a relatively small market. So for example, the Korean company I mentioned we invested in came to the US, is selling a SaaS product in the US. And so they basically are going to the biggest SaaS market. And if you win that market, you're in great shape. And so I think many Taiwanese companies have to think like that. Now, so to answer Will's question, it's hard for Taiwan to pull this off without people actually selling into the correct markets for whatever they're doing, the big markets, the big humongous, China turns out to be another one of these great big market that you can grow really fast in. But the reason I like Rex's question is I've thought about this both independent of this session and also for this session. The US seems to be moving. We used to be atoms, PCs, chips, physical things. Then we moved to bits, software, SaaS, apps on a phone. We may be in a period we're about to go back to atoms again. And Taiwan has got strength in atoms, but the question is which atoms? Today, if you could build that Shenzhen tower with all the gizmos in it in Taipei and get people to fly from San Jose to Taipei to look at it, you might bypass the natural instinct, which has been around for 10 years, to go to China. Let's go to Taipei instead. So that's one thing you could do immediately, but that would only solve the immediate problem. I think you need to start thinking about, if I have strength in supply chain, what is it I should try to build for the globe? Now, there's another question here about Meta. My daughter actually works at Facebook in what used to be called the Oculus VR headset division. Now I guess it's the Meta headset. We don't know whether Meta is going to work or not, but my gosh, building a very good future headset is a perfect thing for the supply chain leader to do. This is a perfect type of thing to focus on and sell it globally. We saw this in China with Xiaomi and a few others that came up with very good Android phones. And because Android is available, they could then sell globally. And they got a long, long ways on that. So again, the same idea here. Will Facebook open up their platform as some other platform? That's not really a Taiwan issue. But if you found the Android equivalent or could develop it, and you came up with a great VR, AR headsets, why not try that? Because that could sell globally at great scale if the metaverse actually takes off. And on top of that, you're really close to Korea, where strong gaming and this whole VR experience is probably going to start in that community. Now you're competing with the Koreans, which I guess you guys should do anyway. There are other examples. I think synthetic biology is about to become another great manufacturing system where you use precision fermentation to create things. It could be cosmetics, it could be materials, it could be drugs, it could be food. You could also use algae itself to churn out other things, like an algae factory. Right. Now, I don't know if Taiwan's any good at this, but this is another area where it's a very atoms business. So to go back to Rex, I could give you more examples, but I think the question is, ask yourself, not today, but what are the future things that are about to explode in the global market that we as a supply chain leader could get ahead of the curve on? Battery systems, you're good at that for little scooters where they change the batteries. That's the type of thing you could take globally very rapidly. There's electric scooters all over the place. Just another example. There's a lot of opportunity with robotic EVs. So you get your pizza delivered, there are drones that are trying to fly and sky drop to your house, things like that. There are other emerging aspirational future markets that are very close in that the supply chain leader could develop and market it through American or European companies to the globe, as opposed to actually having to be the marketing agency.
Yeah, thank you. Thank you, Duncan. I think you just pointed out to two very promising sectors in Taiwan. And maybe not many people knows, but one of my favorite clients, startup companies here, they've been specialized in VR, both headset hardware, and also they are creating the platform as well. So that's why they've burned a lot of cash upfront, because they're doing both. But they started 3 years ago. They believe there's a future, and that the world that exists in the VR is actually happening, not outside of the games. And maybe the social interactions will also take place in the VR world. So I think to have a startup investment environment, and also to truly respect and invest in and believe in startup, is what our industry here in Taiwan need to learn, because they might lead the manufacturing sectors to find the next ones where everybody can pull together to build up the supply chain. So what you just said really resonated with me. And another client of mine, they're doing exactly what you mentioned. They are using algae to do like the artificial meat. And they found that the algae actually create better flavors, especially the algae is also very healthy, high in protein. So I can be very proud to reply to you that in Taiwan we do have a lot of talent pool that we can pull off in the synthetic chemical industries that you just mentioned. So and this is just what I wanted to echo. And another question I think is for Alex. I think this is a question from an anonymous audience member. He wanted to know the range of IRR that's required, that's minimum required from investors in Taiwan, especially VCs or high net worths or family offices. And I think Alice know quite a lot of them. And can you share with us your observation?
Pure observation, because I'm not running either family office or VC. I would suspect the range will be like a 10 to 12% in terms of IRR. The WACC roughly about 7 to 8%, right? I think that's a fair amount, that kind of expectation from a return perspective.
Yeah, I'll make a comment on this. It's kind of hard to know what the IRR should be today because interest rates are so low. And back when in the VC industry in the 70s and 80s was trying to do a 35% IRR, but interest rates were high then. So a lot of people in America don't look at it that way. They look at it on two other dimensions. One dimension is how much return, cash on cash, does your fund make? So a normal venture fund may only be a 3x return if it does well. And a big fund, later stage, may only be 2x. Right now, there are certain funds doing 5, 6, 7, or 10x cash on cash return because the market's so robust. And so during the cyclical venture, that'll last for a few years, then it goes away. But so it's basically the multiple cash back is one thing people look at. The deeper thing people look at, and why Sequoia is such a superb venture fund, is how many great companies did you create? It's not so much a unicorn exit, but did that company become one of the great sustaining Fortune 500 of the future? And so that's a deeper thing. We used to think here that if a venture-backed company got to 100 million of revenue, it was a sustainable, good long-term company, whether it got bought later or not. That was a good marker of success. And it was more on that basis than you became a unicorn. A unicorn is kind of a flashy thing, but creating real companies is really what the secondary goal is. And for Taiwan itself, Alex would tell you, if we had a whole bunch of startups that got to 100 million of revenue within 5 or 6 years, that'd be glorious. And some will keep going and become multi-billion-dollar revenue companies.
Well, thank you, Duncan. And we have another question from an audience that's anonymous. He's asking what kind of companies, or what are the companies in the past 1 to 2 years that have been successful in expanding from Taiwan to the global markets such as China, Taiwan, India. And he's asking particularly in the fintech, logistics, semiconductors, or other sectors. So basically, he's asking about any good portfolios that deserve our audience to watch out for.
I bet it's a question for me.
Yes. Yeah, I'm just thinking maybe Alex.
A lot of it in actually is, well, before I answer the question, I would love to comment one more thing that from a new economy or software perspective, right? Taiwan definitely is late to the game. If you compare that to South Korea, particularly, right? But that doesn't mean, no matter from a market size, from a talent pool perspective, I have a great hope from that perspective, right? Again, even though you don't have that many company, or other than the two like a software company went public early this year, which is my 2 cents I will share with this particular audience, right? If anyone asks me where you want to put the money to work from now to next 2-3 years, my answer is always software here in Taiwan, okay? Another thing is just because Taiwan's late in the game, but yeah, you have to look at some of the potential in Taiwan. Think about those software company. They probably existing from a startup roughly about 10 years from now. Well, think about what happened in 10 years before. That was roughly about 2-3 years before that, after like a 2008. Most of the kind of great student are from Taiwan with an engineering background. They went to TSMC, MediaTek, and no more, right? But during the financial crisis, some of the great engineer kind of students try to do something else. Well, not to mention those are well-established company. You join them, you just join like such a challenging tower, the hierarchical tower, right? So a lot of the great talent, they want to join and the new business or start of their own business, try something else for the better kind of opportunity cost. And we still have a bunch of like a great kind of a talent. This is something that we should be proud of. And also look at the list that Eric ever show up in the beginning. Just look at the top 10 market cap company in Taiwan versus South Korea. In South Korea, you got at least 3 company listed in the top 10 kind of a market cap. Here in Taiwan, you got a 0. You're still dominated by the hardware, petrochem, and semiconductor. I'm not saying those companies won't stay still top 10 years from now, but I don't think that represents the future, right? Considering like Taiwan rep of the game, and considering a lot of kind of a great company, and not to mention the reallocation of the capital, no matter foreign and the local, they come into in that particular sector. I think that represents the future. And go back to this question, if you ask me that in the last 2 years, I would say the IC design, particularly those company dominating that very smart and very sort of prestigious kind of IP, right? It's a slightly different kind of IC design. They are the winner in the last two years. And don't forget, the reason we have those kind of great IC design and IP company, because they are sitting at a solid rock foundation. They got a TSMC, they got a UMC, and the rest of like semiconductor manufacturing industry. This is something that in the short term, no country, including US, can take it away. That is gonna be still play a solid foundation to create a lot of kind of a sort of smart IC design and IP company at the back of that.
Well, thank you, Alex. I just I couldn't agree with you more on your point on software being the future engine of our economy. And from my experience, I've also advised quite some of my startup companies trying to collaborate with some of the big technology giants here in Taiwan who specialize in manufacturing. And but one of the problems that I would like you to elaborate on, and is that because sometimes the big giant technology firms, they know what our client is presented to them is a future great ideas, but they also always hesitate to put in investment monies. Most of the time they say, okay, I can sponsor you if it's a grant, but because we're a listed company, if we are to invest in you, we will be subject to some scrutiny that will revisit the IRR every years, and if you lose money, we will have someone to be responsible for that. So I think all these sentiments makes the CVC sometimes not coming out as more effective as we would like it to be, because especially for the 电子五哥, because they are so historically huge, and sometimes it might kill some innovation within the group. But even when they go out and collaborate with startup companies, they cannot be very straightforward, being like Duncan's firms, just do the investments. They still need to go through different perspectives from different angles to assess. And this is just exactly what happened to my client who's just doing the metaverse platforms. Even for that hot topics area, when they are to forge collaborations with the big listed tech firms, there's still a lot of process that the other side needs to go through. So what's the problem that you think, and how can we solve it? Maybe we should have you speak more vocally to the maybe CEOs or the leaders of the technology sectors in Taiwan, and just to maybe help them liberate their visions on how to work with or how to invest in the innovations and the software sectors.
Well, Sonia, can I comment a bit? I don't know Taiwan well at all. I've only been there once. But a lot of what you talked about is risk aversion. Yes. I've seen it in other places where the risk of failure is greater than the promise of success. Silicon Valley isn't like that. If a founder comes to you and they failed in their prior company, that's not a mark of disgrace. The question you ask them is, what'd you learn?
Yeah.
Now they start blaming everybody else. You didn't learn anything.
Exactly.
But if they say, I learned I made the following mistakes, I won't make them again, they're a better founder. And so we're used to risk. We're trying to get to crazy high valuations and high growth, and there'll be a lot of people that won't make it. We're used to that. But in a culture which isn't used to that, it's very difficult to get that engine going. So I don't know what to say to Taiwan, but I'm just suggesting to people on this call, you've got to have to accept and endorse and support a higher risk-taking culture and let failure be okay. Failure is a mark of progress, not a mark of failure. It's actually good to fail. Try 3 times, then you get it right.
Yeah. Well, thank you, Duncan. That's very inspiring. What about Alex? What's your view on this? And maybe I think the pressure is on you to make things happen.
We're trying. We're all trying. As a matter of fact, that in the past 5 years, particularly we as a firm, have seen a lot of positive progress made. Difficulty is a middle name for the founder. Don't complain, right? Difficulty is born to conquer. Difficulty is the man you want to be outperform the others, or you can work for TSMC, get salary, right? Stable life, right? So I don't think that's a natural of entrepreneurship, right? Yeah. As a matter of fact, let me show you some data we have collected. In the last 5 years of the decade, right? All of the software company raised roughly about $4 billion US, right? Among about 130 companies. Again, the number doesn't sound great. It's accumulated $4 billion US compared to one in China, Silicon Valley, South Korea, as a small number. But let me give you a comparison. That number was 4 times larger than the previous 5 years of the decade. You see the progresses. You see the progress. And another thing, I think that all of the founder, they need to learn the lesson. Again, just like I see a lot of comment that market size and globalization and so on and so forth. Look at the TSMC. It took 30 years to make the TSMC today. Do you want to see the balance sheet? Do you want to see the return like 25 years ago of TSMC like? I need to remind a lot of audience and investor, 25 years of TSMC, they never generate like a positive cash flow. They're always below 5%, right? It's just like a lot of it, like a newly startup company nowadays. We had that moment, right? But in the last 15, 20 years, all of a sudden entrepreneurship is gone out from Taiwan.
Right.
So that's why I really appreciate this is the timing, no matter COVID, because changing of the supply chain and so on and so forth. Just grab this opportunity. And as a matter of fact, in the last more also like 2 months, all this is a $4 billion money raising. I start seeing the speed up, accelerating, not only about the number, the money they raise, but also the valuation. Look at the valuation. Right. Again, people can always argue that this valuation, that valuation, because of the bubble. But again, just compared to last year and the year before, you see the price of sale value because they're all of pre-money. the price to sell from like a single digit to high single digit to double digit, which showed another very strong sign, regardless of where the money from, no matter from a CVC, the local VC or foreign capital and so on and so forth. You see the direction, you see the trend stop kind of coming up. So all I can say is stop considering this difficulty, because compared to 5 years ago, it's a lot more better off. And I also would love to encourage all of the young founder, right? That's what I built up this platform for, right? Speak up yourself. Speak up to global investor, right? To prove, not just do it. You have to do it before you do it, before you prove it. Say it. Dare to dream. Talk about your 5 years plan, not just about Taiwan, but about the other markets. Because of I don't know why, maybe it's because of our DNA, maybe because of our educational system, right? We always told by the elder one, be careful, be conservative. Right?
Yeah.
I think that possibly is a wrong sort of inheritance we need to carry on. Speak up. Speak up. Be brave.
Thank you, Alex. Thank you, and thank you for reminding us, especially we all come from Taiwan, that we used to be entrepreneurial and we used to be able to invest the whole resources into TSMC that risky companies before. So I think we can do this again. And I think we have one last question from the audience, and this is question from Jesse. He's asking because, like we said earlier, Taiwan companies has a smaller capital size. So how are we going to get the interest from U.S. or international investors, especially if we wanted to go listed in the U.S.? Maybe I will rephrase his question to maybe not all the Taiwan companies are suitable for going to get investment from the U.S. capital markets. So maybe I think Duncan first can shed some light on this. And what do you think are the companies that are suitable to raise funds in the U.S. from Taiwan? And then maybe Alex, you can also share us with your views on this. Taiwan companies going to U.S. capital market.
Well, very quickly, Sonia, because I noticed we're going over time, and Lisa just gave us the acts. I think if there were strong local venture funds in Taiwan, they would need to develop strong relationships in the U.S. And it's through those relationships they can spring their companies out of Taiwan to U.S. investors. The Taiwanese company doing that needs to have a significant footprint in the U.S. For example, when Australian companies want to come to the U.S., we always tell them, get investment in the U.S. But you got to actually invest more business development, markets. You got to put more on the ground here. And they do, and they get local investment. So it's almost like the Taiwanese company has got to find a way to get over here with relationships and localize itself a bit in the U.S. And that'll start the whole good process rolling. And eventually they could go public here. But there's a lot more to talk about that if that's what they want to do.
Thank you. Alex,
I would love to share some number with you guys, but from a slightly different kind of perspective, because my strength and the focus is more like a capital market, right? And particularly like after the IPO. Let me show some number. Taiwan as a market here in Asia is the one of the most globalized kind of a market in terms of ownership. 43% of a Taiwan company by market cap held by global investors. You are not as with so much kind of U.S. footprint as a Duncan just highlight. Stay in Taiwan, listing Taiwan, because a global investor, U.S. investor, will come to Taiwan invest you, right? Out of this 43%, people gonna say gotta be TSMC. People gonna buy TSMC. The answer is no. Outside of TSMC, outside like a top 100 kind of company, most of the Taiwanese company, roughly about 95% of a public company listed in Taiwan, are classified as a small cap company, right? I can show the data if you have time. A lot of them, all the way from a super like a mid cap company, from 50 million all the way to 200 million. They attract various kind of global investors, not just US, also from Europe. right? Again, they go back to my previous kind of a comment. Just be brave, just speak up. Otherwise, people won't find you. No matter how good you are hiding somewhere. Just speak up, speak to Duncan, speak to some other investor, show up, write an email, say where I am, who I am, and where I'm coming to, right? Even you choose not to go public in the US or some other market, I think you will enjoy a lot of attention from a global investor, even stay in Taiwan as well. That's my final comment.
Thank you, Alex. So we're out of time and we're back to Alyssa.
Thank you, Sonia. And thank you, Duncan and Alex. I can see that we still have quite a lot of questions, yes, in Q&A, but unfortunately, we won't be able to cover all of them today. But, you know, like when I curated this session, I really, in addition to the trends that we're seeing in the capital markets, I think what I truly want to bring out is that capital market and also money is really a universal language that enables innovation across border. I think that's really, in my opinion, one of the most important tools. So the way I look at it is money or a capital market as an enabler. And I think, you know, like for Duncan, for Alex, and also a lot of the people from our audience, you were really that driving force to bring the changes across border to really enable more solutions co-created together from founders, no matter where they're from, all over the world. So I want to thank you really all again. I know that there's a lot more questions that we haven't touched up on, but hopefully this will bring you more inspiration and maybe the starting point for a lot of conversations to come. Feel free to connect with our speakers. You have their QR code. If you scan them, you will get connected to their LinkedIn and send them a message, reach out to them to continue with this conversation. So, and please look out for the event recap and video recording throughout the emails and also across our social media channels with DIGITIMES and Anchor Taiwan. Someone from the audience was asking whether the recording will be available afterwards. The answer is yes. And just very quickly, next month, for the finale of the Asia Venturing session this year, we will explore whether Asia is leading the next innovation. We have a lot of discussion about from capital market to culture and so on and so forth. While, you know, like we used to look at Silicon Valley as the mecca center of innovation, the reality is that, you know, the movement of goods, talent, and capital from and within Asia is really shaping the world as well. So what are those trends from the supply chain to new economy that Alex referred to? What should we pay attention to, especially when it comes to the Asia-led innovation? That's what we're going to talk about. So next month, join us again with an all-star panel to find out. You will see the QR code to RSVP at the end, which you can scan to join us next month. Again, with that, together with DIGITIMES, I want to thank you all again. And Duncan, Alex, and Sonia, thank you so much for sharing your wisdom with us. I hope to see you all again very soon. And have a nice one. Bye-bye.